Amid intense competition from new-age tech startups coupled with weak macros, shares of logistic companies underwent sharp correction in the past 6 months. Shares of All Cargo Logistics, Concor, Mahindra Logistics, TCI Express, Transport Corporation of India tumbled up to 27% as against 2.5% rise in the S&P BSE Sensex. So, are they a good bet after this correction? Analysts believe listed logistic players must invest in new tech in order to secure their market share.
Startups are leveraging technologies such as AI, machine learning, data analysis, automation, etc., to cater to the growing demand of users and to provide smarter, cost effective, and enhanced solutions. In terms of technology, traditional logistics companies are still lagging behind the new age startups. As mentioned earlier, the domestic logistics space is changing rapidly due to the introduction of multimodal logistics, improving railway road infrastructure, and rising demand for efficient, seamless transportation of goods. It is the time for traditional logistics companies to veer from the old methods and invest in tech platforms. It is the only way to secure their market share in the coming years, or they will continue to grow at a single digit growth and lose market share to new age companies.
New age tech based logistics startups began to spring up after COVID-19 crippled supply chains across borders. Using artificial intelligence, blockchain, and data analytics, these startups aim to streamline the entire logistical process digitally. According to strategy consultant Redseer, total shipments done by e-logistic firms stood at 4 billion parcels in FY23. This is expected to witness a compounded annual growth rate of 20% by FY28. Experts said, despite e-commerce logistics industry seeing intense competition from smaller incumbents, steady e-commerce growth will enable overall e-commerce logistics exceed 10 billion parcels by FY28. From an investment standpoint, analysts remain selectively bullish on logistics players and expect a return of 25 to 40% in the next 12 months.
I think over a period of time, people will move on to listed players or players who are organized thing. So where you get the bill and you get everything, and where margin of safety is there, and where you can track your load, where it is going. The software which says where at this point of time where your load is there. So that transparency also is very important. So I think these are temporary things, but we are still positive on Blue Dart. And we are positive, on VRL Logistic. Mahindra Logistic is still a loss-making company. It will take time to recover. But you have, TCI Express also, which is doing very good. So I don't think there is a problem. For a long-term investor, it is never a problem. Yes, in short term, there can be some pressure due to, cooling down of freight prices.
Analysts recommend investors to adopt stock-specific strategy with focus on companies that are rapidly innovating and investing in technology. Today, crude oil inventory data, global cues, foreign fund activity, and rupee movement will guide markets.
If you like this video, share it and subscribe to Business Standard. For more news, views, and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram, and LinkedIn.